Thank you so much for joining me today. I am super excited to sit here with Andy and Paul today to help us navigate what it's going to look like to get a mortgage, or if you have questions about financing. And don't worry, I make sure that I really ask these guys the questions to give us the straight up answers, because we want to know what it is that we need to do today, right away, depending on our situation. So I'm happy that you can join us, and I hope that you will get a lot of great information from this week's video. Right. So is there an advantage to staying with the same lender versus maybe moving your mortgage over to a different lender?
I think it all depends in terms of what that lender might be offering for that situation.
Okay.
And so I think as of late, we have started to see lenders be a bit more aggressive with retention,
Okay.
knowing that, hey, like people might not qualify anywhere else, or hey, you know
Right.
what, rates are coming down. Maybe they will qualify somewhere else and leave.
Right.
Let's put our best foot forward, which before was not the case. And so
Right.
they would say, hey, this is our rate, this is what we're giving you, and that's it.
Right.
But now with more competition happening, and I think with the amount of deals not happening in the market because people can't qualify, that market share is not there as it once was. And so
Right.
now they're trying to do a little bit more to keep everybody.
Interesting.
Yeah, and to touch on that, we are here to give you we and all brokers, everybody, every advisor are here to give you an unbiased opinion.
Right.
And so if we go through all the paperwork and we find a new lender that's going to be better for you and restructure your debt for you, but your current lender comes back and says, no, we can do better.
Right.
Dollar speak. We
Yeah.
can't say you got to move because
Yeah.
we
Of
did the work.
course.
That
Right.
was our free advice to you.
Right.
And we helped you as much as we can, but stick
Right.
with the same lender.
Yeah.
Right.
There's nothing wrong with that.
Are there additional costs involved, though, if you are going with the new lender, that a buyer that's just doing a typical renewal should be aware of that? Because sometimes we do focus on the rate
Yep.
and we focus on payment.
Mhm.
So again, just to sort of uncover some of the practical side of things that people may not be thinking about is, oh yeah, this rate looks great, let's go with this. But then you start to sort of really look at the adding up all those costs. So
Yep.
what a typical cost that a renewal would possibly be looking at that they may not be aware of because they are making the switch?
If you're with the same lender, then there's obviously no cost because you're staying within.
Right.
But if you're with that lender, the same lender, and you're doing a refinance,
Right.
you're consolidating debt, then there still would be some costs involved because you're changing the registration, right? You're taking out extra funds. So all of those things, there, maybe you're looking at anywhere from $1,000 to $1,500, give or take, for your lawyer costs, right?
Right.
And then now if you're switching lenders, you'll have an appraisal cost most likely,
right.
Unless the new lender is willing to waive that. You would have your cost to transfer over, so your conveyancing costs, again,
Right.
anywhere from $900 to $1,500, give or take, to do the transfer. And then if you're up for maturity and you're doing it, okay, there's no penalties or anything like that. But if you're mid-term, then you'll have a penalty to break that current mortgage and switch over.
Makes
Now,
sense.
with that being said, there are some lenders that are also offering cashback offers to say, hey, if you come over to us, we'll give you, depending on the mortgage amount, I'll use TD as an example, this threshold, if your mortgage size is this, we'll give you 1,000. If it's this number, we'll give you 2,000. If it's this, 3,000.
What does that number look like?
And so if your mortgage size is large, $1 million, I believe, or over,
Okay.
I believe their offer is like $4,000 or 4,100 or something like that.
Okay.
And then it tiers down. But the lowest I think they offer is like maybe $1,000, give or take. And so it just depends on the tiers, and that's just one bank, right? Every lender might have a different threshold for what they're offering to move over.
Okay.
What I would suggest is, when you're sitting down with your advisor, is break down the numbers and the cost. So this is what you're paying. In order to switch over, this is your penalty. If not a penalty, this is your legal fee. This is your appraisal.
Right.
And maybe you're going to cash back, and then break down the difference, what makes sense.
Absolutely.
1 + 1 is 2, not 1.8.
I 100%. And I think what I find when I'm doing open houses and I see you guys out there, you're working without realtors or you're working without brokers, and everybody's trying to do this homework and trying to, I'm just trying to get an idea of what that would be and an idea. And sometimes you don't know what questions to ask because you're not yet working with somebody. But if you're working with Andy or Paul, for sure, they're going to break down every dollar, every cent for you, so that you before you make a decision and you sign on the dotted line, that's when you're understanding exactly what you're going to be paying and why you're going to go with A versus B, right? So this is more so people that are at home, they're watching these videos, they would just kind of want to know what they aren't paying attention to or what they didn't think about yet, right? So ideally, you do want to talk to a professional right off the bat instead of just spinning questions in your mind, which is what we all do. So Andy, in terms of your common sense lending, I'm thinking of investors right now. I have clients that are investors that have a portfolio of properties, and we are sort of, I want to say dissecting. It seems like it's almost like a autopsy a little bit, but not to be too somber. But they're trying to make decisions as to whether they should offload properties or how to move investments or possibly renew if they are coming up. How are you finding that right now in terms of navigating that world where everybody is, like you said, very vulnerable? And options are: do we get rid of this off the books, or it's not an asset anymore? There isn't growth that we've experienced in the last 10 years. People are used to 5 to 8%. This is great. Let's ride this again another year. It's not there anymore. So how are you finding that right now in terms of just the sentiment out there?
I'm finding the conversations have to start with where they are personally in their life, because a lot of people are going through changes, transitions, what may be, and that's where you kind of start with and say, and now if you say, okay, where's your comfort level, right? And so now, if you're a negative $2,000 per property, that's because the rent's coming in,
right?
Well, if you can carry that for a year, that's a $24,000 difference,
right?
Well, look at your price point. Are you going to drop it by 50,000 or are you going to drop it by 24,000?
Okay.
And that's going to be your even point.
Okay.
So you have to look forward, as in, because most of these are negative cash flowing properties now.
Yeah.
And if they're positive, I don't think we're having these conversations.
No,
right?
100%.
They're saying, no, we're
then
good.
it's like, Sally, help us buy more.
Yeah, help us buy more, right? Yeah, exactly. And so you look at the cash flow. If it's a negative, you say, okay, what is a prediction? No one has a magic crystal ball. If we did, I'm sure we wouldn't be sitting here today, right?
Yeah.
But
it's amazing how many people think they have a crystal ball, though.
Right.
Yeah.
Like, are we stable at this? Okay, great. If you think this is the bottom price, can you afford this?
Right.
And if you can, you might want to think about selling now, because there's going to be a point where it crosses.
Okay.
And like, okay, in a year from now, you're back to square one.
Right.
You could have sold this. And so that goes on and on for per property.
Right.
A lot of our common sense borrowers and investors are doing it through investment companies and holdcos.
Yeah.
Okay.
Right. And through holdcos, there's whole different tax strategies.
Okay.
We can't get into that today, nor tax advisors. But we've had a numerous amount of conversations with accountants.
Yeah.
We've actually had to say, hey, why don't you look at things this way?
Interesting.
Like, how did you guys know that? Being investors ourselves, we've had to go through the pain and hurdle ourselves of learning how to do our tax strategies.
Perfect.
So when you're in a holdco, for example, which a lot of our common sense borrowers are, and you have operating income coming in, well, how is that money being shifted to the holdco to pay the negative debt?
Okay.
And is that considered a loss on that side?
Right.
And what are you telling your operating company? Is
Okay.
that an expense? Is that a loss?
Right.
And that's another beast we can get into, right?
Okay.
These are for investors.
So we're talking about holding corporations. That's
Which
what this is. Okay.
Yeah, holding corporations that people buy multiple properties in.
Okay.
And then that money's coming usually from their operating company because they're business owners.
Okay.
Right. And so those are tax strategies. You have to sit down with them and saying, okay, is there shareholder loans amongst each other and so forth. So it's not just, there's no one answer, but I would say if you're in a negative cash flow situation, what is your maximum timeline for you to hold off?
Okay. It is real estate, right? It's all about timing.
It's all about timing, and then also just a little bit of projection in terms of, hey, we're in a negative cash flow situation now with these specific rates.
Right.
Okay, if we see rates come down, or we are seeing rates come down, is my negative 2K going to turn into negative 1K at some point? Okay, how long can I hold this out for? Does it make sense? Do I think there's going to be enough appreciation on the property where it makes sense to continue this cash flow loss?
Right.
And will I see the upside when I sell eventually, or like you said, hey, do I just get rid of it now, stop the bleeding, have some funds come back in, and maybe I can repurpose those somewhere else,
right,
and go from there, right? And so.
Yeah. Or go to a different location. I know everybody's going to Calgary. Don't go to Calgary just yet. Just talk to Andy and Paul first. Do not go to Calgary yet. Let's just save you from that.
We also dig into, 100%. You can, otherwise, you might as well just keep going. Like, where does it end? Alberta?
Well, I don't think you want to go too far the other way, because that's a whole different side for sure.
And so we look at most of the times when we see operating income, they net the least amount, right?
Yeah.
Because everyone writes everything off.
Yeah.
That's why business owners
sure.
like their operating companies.
Yeah.
You're a CREC and we're self-employed in our company, write things off. And so we dive into that as well.
Right.
And say, okay, what are you writing off here?
Right.
Let's talk to your accountant before your year-end financials are due.
Right.
So that's where Paul mentioned earlier, we have year-end reviews.
Right.
Those are staggered because every company date is different from January to December.
100%.
So in our database, we're calling you 6 months before your year-end, 3 months before year-end. Let's talk to your accountant.
Right.
What's the plan?
Right.
What's the plan going forward?
Right.
Let's look at your financials, because we want to be prepared to send those to the lenders, not go backwards and try to fix them. And once they're filed, you don't want to open up that can anyways.
Yeah.
Right. So we want to talk about this in advance, and that conversation, along with everything we talked about, is so crucial, especially when you're in the common sense operating business owner investor kind of circle or box. Right.
So it makes sense. Absolutely get a realtor involved to help you to figure out value. Get a mortgage broker involved to help you figure out if it's just 1 or 2 properties that you're holding. But as Andy's saying, this is something you need, that think tank where you've got your mortgage broker, you got your common sense lending, you got your accountants, and everybody sort of looking in and helping you to find where those sort of pockets are where you can sort of navigate the success out, whether it's a time thing or whether it's just stopping the bleeding thing, or possibly a combination of all of the above as well, which I think a lot of people are dealing with. Thank you so much for joining me on this week's video. I hope that I shed some light as to what it looks like in terms of getting financing, depending on your situation, how things generally work in the mortgage world. And as much as there's a lot of information out there, it is just really about working with the right person who can help you navigate the sort of details as you need to understand them, so you're not overwhelmed by all the information at the same time. And again, it's really just also important to have a realtor who is working alongside the mortgage broker to really ensure certain properties are going to be able to get through the system a little bit better, or if there are any issues, what we can do to plan ahead for those. So I hope the video has been helpful. Thank you so much for watching all the way to the end. As always, if you're not currently working with a realtor, then I'd be happy to apply for that position. Please just feel free to reach out if you have any questions at all. If you're not quite ready yet, then I'm happy to help you from a distance by putting out these videos and hoping that they're helping you. Thank you again, and we'll see you on next week's video.